Dr. Kim Anderson, our crop marketing specialist, is here now. Kim, let's dive right in and see what's happening in the markets this week.
Well, in the wheat market, there's a lot going on, little less in corn and not much going on in soybeans, and of course cotton is cotton. You look at, say, go back 2.5 weeks on wheat prices. They fell off $1.30, $1.35. They increased $1.60, $1.65, fell off 77 cents, increased 20 cents, decreased 20 cents. A lot of volatility going on in that wheat market. Corn market, you can come back, you know, they were wallowing around in the up around $6 through February. Dropped off a little bit in March and April. In the last couple of weeks, corn prices have knocked off 70 cents. They gained 20 back, so forward contract price around $5 right now. Soybeans, they knocked off $1 in the last 2.5 weeks, down to around 11 for the forward contract for harvest delivery, and have stabilized down there.
Why do you think we're seeing so much volatility?
Well, if you look in wheat, it's the tight stocks, especially hard red winter wheat. You look at hard red winter wheat production, second short crop in a row. Look at soft red winter wheat. They're expecting record yields in Illinois in some areas of soft red winter wheat. You got over a $2 spread between hard and soft red winter wheat prices. Of course, you've got tight stocks overall in the United States. Overall, U.S. crop, 1.65 billion bushels, right in there for the last 3 years with a 1.85 average. So tight stocks in the U.S. You always got Russia. I think the war is mostly factored in, but you got Russian production. You go back 3 months ago, they were at 2.8 billion. They went up to 2.9 billion. They went up to 3 billion. This week they raised them again. Russian carry-in stocks, about 250 million bushels above average. Russia's got a lot of wheat to export, and there's a lot of uncertainty there. Corn, big crop expected, more planted acres expected, in relatively good stocks going in, but tight, but lower any stocks for next year. Soybeans, about the same. Got to watch Brazil for the corn production too, so South America for corn and beans. And cotton, well, cotton's cotton. Cotton's just wallowing between 79 and 84, and it's about 82 now.
So with all of this in mind, lots of details you're packing in this week. Should producers keep up with these markets?
Probably not. However,
I didn't expect that.
Yeah. However, how can you not watch the market? It's kind of like watching the weather. How accurate is the weatherman, and how accurate is economists predicting prices? We can't predict price. You need to watch the market to know what's going on, and you really need it to know and understand the market so you know you're not losing a lot of money that somebody else is getting. So yeah, watch the market this time of year. Just see what's going on. It becomes really important to watch the market as you get into harvest, start harvesting it, and you've got something to sell.
So speaking of that, how should producers sell those commodities?
I think dollar cost averaging, just stagger it into the market. I think the most important thing that producers can have is a plan. I like a written plan. Talking to the elevator managers, research shows the biggest mistake producers make is not knowing when and how to pull the trigger. And if you'll write it down, know your cost of production, know what prices mean to you personally in your operation, and know and set limits and know when to pull the trigger.
All right, Kim, great information. We'll see you next week.